We had ourselves a volatile closeout of the last trading week, creating an outside trading bar. So we're going to talk about that on today's Stock Market Brief Show. We're going to give a snapshot of what happened, the market, some seasonality stuff, some updates on market conditions, the expected moves of the S&P 500 from a weekly basis and a daily basis going into Monday. We're going to look at some of the intermarket charts and give some updates on the signal charts. I'm doing this really because there's a lot of fear that happens when we see down days. And I'm going to go ahead and revisit these conditions to kind of ease those worries and be prepared for where the market can potentially go down to and what levels to watch for. Let's go ahead and hop into today's snapshot. We're looking at week-to-date performance over here, and you can see IWM fell the most at 4.22%. Towards the bottom, you see the stronger performers on the week-to-date basis, and that right there, you see a dollar that rose and oil that rose. When you get rising oil, right, and when you get a rising dollar, even when you get rates to come up, which we'll touch on, that has been so far a bad environment from a correlation standpoint for some various other assets. But lately, those correlations have been kind of breaking down. If we take a look at the 11 sectors that make up the S&P 500, from a weekly basis, our top performer and only sector in the green was the utilities sector, which on the prior video or the one right before that, we talked about how the rate of change of utilities relative to the S&P 500 has been showing outperformance and how it broke out of a base and we saw some follow through. So if you had any utilities, that right there was a saving grace in last week. So if you take a look at the S&P 500 on a weekly basis, we did have that outside trading week, trading well above the 40-week moving average. And for those that don't know, these bearish outside trading weeks can be considered reversal candles, right? A 2-bar reversal pattern. But, you never really know the context quite and if it's going to happen. So you kind of look towards statistics to give you an idea. Hey, when's the last time this has happened? How frequently do we get follow through and so forth. So I went back to just January of 2022, slightly before that. And what I found was 14 bearish outside bars. So you had 1, 2, and they're actually kind of marking around tops, as you can see, but not all the time. So to dig a little bit deeper, I looked at, okay, which of these actually had follow through to have a week that closed lower the following week. So there was 9 follow through weeks that had a lower weekly close, and those are the candles that are highlighted in red. So you can see here the following after the outside bar, we close lower here, 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 and so forth down the list. Now, this one's white as it stands right now because obviously we haven't had our next week. So what is the percentage basis there? Well, less than a standard deviation. So 64% of the time since basically January of 2022, you can see that there's about a 64% probability that we close the next week lower. Now, you might be able to raise this probability a little bit if you take a look at seasonality, where we are in the beginning of August. Well, first off, August in itself is rather of a flat month, but at the beginning of August, the first 7 days or so, 7 trading days, right around there, first week, first 9 days, whatever, it's typically pretty weak. So not only do we have a bearish outside candle, but we're following up with some weak seasonality if that's something that you look at in the month of August. Now, what caused this? A lot of people like to look at narratives, right? But we were kind of ahead of the narrative. We knew that a narrative would come to be a trigger, which I'll show you. If you haven't been watching, by the way, if you haven't watched this show or this is your first time watching, well, let me know in the comments or just subscribe there too as well. But we had the stock slump on the latest tariffs and some soft jobs data. We had revisions taking place in the jobs data, and we haven't seen that type of revision since COVID. And then before that was 2008 great financial crisis. We had also Apple report earnings and Amazon report earnings. Apple started up on a little bit of an uptick, but then just sunk off through the entire trading session. And Amazon was not looking all too hot as well. Now, prior to all this, we were talking about the danger zone, how back month versus front month volatility was reaching into extreme levels. And this is where you typically can look for some consolidation or some pullbacks. On Twitter, if you don't follow me me there, or sorry, X. You can follow me on X. The username is Mike P. Silva. That you probably just search figuring out money, but just make sure it's the verified one, and that's my username because there's a lot of scammers out there. But on July 29th, I posted that we're in an environment where we get many small up days, but when volatility hits, it wipes out 10 to 15 days of progress, and people freak out. Well, just take a look. This was that down day right there, and if you date back, that's, well, what, 15 to 20 days worth of progress. That is a type of market condition that we are in, where you get many, many small updates. And what is the cause of this? It's when we're above the gamma flip line. It's when volatility is typically below 19 and sinking right down to 50, down to 16 and so forth. And the market just moves slowly, subtly, and just like this. And then all of a sudden when volatility strikes, bam, we get a big down day. Now, we've been watching this positive gamma for quite some time, right? We've been utilizing this to determine market conditions. So you can see here, to no surprise, we actually fell underneath the gamma flip line. That's why it's turning blue here, and that's why volatility increases. That's why you see dealers start to selling to the selling, buy into the buying, volatility increases, liquidity dries up. That was this big portion in March to May, March to April, over here where the market was sinking off. That lets us really know and be prepared for how we approach our strategy in these markets. If you look at the VIX, right, these gray shaded areas are highlighting the times that the S&P 500 fell under the gamma flip line and then got back out. And you can see we fell under it, it rose, it rose, it rose, it rose. And then guess what? Right over here, we flipped under it right out of the open, and volatility began to increase. Now, the reason also that we pointed out to be very careful around an area like this is because if you dated back when we showed this chart, we started dating back the last time we were over here in February. And in February, this was February of this year here. I believe it was February of 2020. February of this year here. Sorry, I'm getting all confused. I'm losing my mind over here. This yellow line is highlighting this time, the same time that we actually got back month first front month volatility that high. And then this dash line is when we fell under the flip line. And that right there was a combination to see some volatility increase. Now, I'm not calling for that same exact thing to happen, but now we can start to look at market conditions for when they start to change, use technical analysis and some of the signal charts to potentially help us better find entries if you are looking to buy the dip or look for key levels to trade from. So let's go into market conditions, give you an updated chart of back month first front month volatility. We came up, we got extended, we went through 20%, right? And now what? Well, we're falling back down. So when we get through 1.0, if we get there, that's typically where the market looks to find some sort of a bounce, some sort of consolidation. Just as if we got into an overbought area, now we start to look for these oversold conditions. Yes, it can get extreme. We've seen extremes happen. That's when volatility really fires off like a rocket ship. But volatility right now, if you look at the VIX, is not that high. It's at like 19 or 20 or something like that. So it's nothing crazy currently right now. So as of right now, you can see the gamma flip line is roughly at about 6,300. We are below that. Now, a couple of levels that I want you to pay attention to is going to be the quarter to date VWAP and the all-time high volume weighted average price. Those could be some levels of confluence right next to that gamma flip line, right? About 6,300 that the market can have some struggle. Now, if we can get above that and hold above it, that's a much more bullish sign. But as it stands right now, we are below it. Also to note, we're below declining 5-day moving averages in the SPY, Q, IWM, DIA, XBI, and the semiconductors here. So if you are a patient trader, you want to wait for the market to show strength versus you try to being correct before the market proves itself. Does that make sense? I hope it does. Let's look at expected moves. This is the SPY on the 15-minute chart. Going into next week, our weekly implied move is 635. I'm just going to round it to 635. If you want the exact levels, screenshot and put them on your chart. The lower earnings implied move is at 608.37. And what I shall note right now is you can see that the lower month-to-date EM is right there at 608.10. So you have confluence of the monthly expectations of August and next week's lower expectations. So if price were to stay below the declining 5-day moving average, as it is currently right now, below a declining 5-day moving average and below a declining all-time high VWAP, this would be the levels to potentially watch for. Okay, I don't know if it's going to go down there by tomorrow, by the next day, by the week. I don't know. But I do know this. From a daily perspective, the market's saying we have about a 68% chance of coming here and or there. Now, if we come up here to about 628, Where is that in confluence with? The all-time high VWAP that is currently declining, and it would be still below a declining 5-day moving average. Okay, so for whatever reason, if we start to bounce up, watch these areas up here and pay attention to see how price navigates through it very carefully. It doesn't mean that we can't go up higher. Maybe close the gap, right? But you want to see the all-time high VWAP start to flatten out, turn up, and price to hold and show strength to feel more confident that this was just a shakeout type move. If we get rejected and pushed down and we ultimately create a lower high, that is opening the door to these lower marks there on my screen. Let's take a look at some of the intermarket charts going on. On X, I posted that that's 10-year yield and the Bollinger Band width down here was getting very tight, levels that we haven't seen since earlier in 2025. But if you were to pay very close attention to just how tight this was, we haven't seen the Bollinger Bands this tight since the year of 2018. And why I show this is because Bollinger Bands, they're just highlighting periods of contraction and expansion. It's a very quick way to visualize that, especially looking at the width. When they get tighter, when the Bollinger width goes down, like this it is right here, it's telling us that the bands are moving closer together. And one of the basic principles of technical analysis is things move between contraction and expansion all over and over again. People get excited, things go extreme, then they calm down, people forget about them. All patterns, to some extent, do the same exact thing. So what was the cause of the trigger of the expansion that's most likely taking place right now was, well, we had the jobs data, we had the various narratives that can cause the triggers, but take a look. Right thereafter, we had the 10-year yield see an explosive move to the downside at 3.21%, closing at 4.22% on the 10-year U.S. Treasury yield. Oil also came off about down to 3%. So continue to watch this because as it stands right now on the very shorter term, we do see a series of higher lows. And I mean, I would consider this a lower high right here, but in the very near term, you do technically have a higher high right here. So we'll see if this low is taken out or if it kind of hold the 50-day and energy and oil want to go ahead and head higher. The dollar also made a very, very strong move. We've been looking for a bounce to take place. The bounce happened. We broke this trend, and now we're coming in for the back test, but overall a very strong move down in the dollar, which, you know, could be, if this continues to the downside, good for risk on assets as we've seen prior, where the market or the dollar has been going down and has been very positive for risk assets. Copper, as we previously stated, has already made a gigantic move. Remember, when you get very strong moves in any type of direction, they're very well frequently matched with a counter trend bounce of some sort. So for example, when we saw massive volatility here, we saw a counter trend bounce here before heading lower. With this, I would only imagine that we're going to see some sort of counter trend bounce in the very near future with copper. If you take a look at the Sailor to Shift tool, Bitcoin came off a little bit here at around 115. We're still on a buy signal and buy trigger in this current moment. If we have a next week close under here, that would be the sell signal. And then we start to look to see if this current week's low is taken out, which it just has not been obviously yet. We need this weekly candle to close. If you take a look at the daily chart for Bitcoin, still a nice breakout. We've been flagging. I was looking for a potential back test and or just break out of the flag. And I would say that this is kind of right around that back test area over here. So, you know, bounce from here, that'd be cool. Or you head a little bit lower and then come up from these levels. Awesome. You still have a EMA from a relative strength line between Bitcoin and S&P 500 trending up. And this is just kind of pulling back here too. So nothing really broken here by any means. You're still seeing a series of higher highs, higher lows, and you have your buy signal, buy trigger still at this moment with the Sailor to Shift tool. All right, let's look at quickly at some of these signal charts. We've been talking about how they've been building out bearish divergences. Well, as we already stated many times, when they become overbought, there will come a time where they come back to oversold conditions. Now, as of right now, this is not considered oversold on an RSI standpoint, but it's not far off. And then I would just pair this with just understanding that this is still relatively high reading looking back on the BPCOMP. So, you know, this could stay oversold for a while if this wants to come in further. The BPNYA, this is the NYSE bullish percent index. We did move into an oversold condition after building out this bearish divergence. Still not really a low reading by any means here on the BPN and the NYSE bullish percent index. For the technology sector index, also moving into that oversold condition, but still relatively well off any kind of extravagant lows from a percentage basis there. Looking at that chart, BPNDX moving into an oversold condition here. Still, it's the lowest reading that we've seen since April, but still relatively holding up high. So we'll continue to kind of track that and see what it does. But just be aware that we're now moving into the oversold condition, and I like to look for bullish divergences to take place. BPSPX also moving into an oversold condition off of basically one down day. Where are we here? About 55%. When you cross down through 70, it has proven to be somewhat bearish, not for long periods of time, not necessarily, but just understand that when you cross down through that, it's typical to see weakness, and we saw weakness, and now we're moving the RSI into an oversold condition. This is the CBOE options equity put to call ratio, not the total put to call ratio, but the options equity put to call ratio. And I like to watch this 0.75 when you apply a 5-period MA, because if you get above it and you start crossing down below it, it's actually marked out kind of bullish turning points in the markets. You can see these both the little spikes over here. And even here, it didn't quite reach up to it, but as it started to turn around, that marked a pretty bullish move. And we're up here near 0.7, right? The last time we were up at these levels was right here, and then it started to turn back down and we headed higher. So just understand that it's working off these kind of conditions from being very, very extremely bullish. And now I'm looking for more bearish readings to become more bullish, take the kind of contrarian view there. Now, this is the NASDAQ composite divided into the total put to call ratio. Yes, the total put to call ratio. We apply a couple moving averages and we look for them to cross over. And you can see we're still on the buy signal from back here, and the market's been kind of heading higher. This is a very laggy indicator, but sometimes it catches on to the bigger trend. So the last sell signal was here. We went down, we went up before our first buy signal. The buy signal, we went up. And well, they are getting close, but we still haven't kind of crossed over yet. So we'll monitor that and see what happens in the near future. The NASDAQ McClellan oscillator, you can see down here, is moving into more of an oversold state off of basically just one down day. But leading up to that, we had the parabolic SAR for the last 4 trading days tell us to, hey, be aware there could be a potential change in trend. Just like here, we saw a potential change in trend, and well, the market started heading up higher. We got a bunch of whipsaws here. You had a bullish signal there. Boom, it headed higher from that point, and so forth. So it gave us some insight to be aware. Well, now it came in, so now we can start to see if oversold levels start to work themselves off, and this starts to turn back up and give us a more positive buy signal. The NIMO, this is the NYSE McClellan oscillator. I like to look at the traditional calculation. This one's not considered oversold looking back through history, but when it does get oversold, you want to pay attention to those levels, especially if you're short or if you're trying to start a new short position. You know, it's better not to do it at an extreme level. If you look at the NYSE McClellan oscillator traditional calculation, it's typically when you get to around 250 where you get more of an oversold condition. But as we've been stating here, we've been watching this bearish divergence build for quite some time. That's just telling us that price action's heading higher, but the internals are weakening. And well, price finally caught down to the downside, resolving that divergence. So now we can watch for bullish divergences to form or potentially oversold conditions. So we got a lot of different signal charts giving us these readings. They're working themselves off of overbought conditions. We knew that things were getting frothy. Many people didn't want to believe that, but if you pay attention to the market conditions, we are in an environment to see, as we stated here, many small up days, but watch for volatility hit. It doesn't mean the end of the world's here by any means, right? A lot of people are calling this the top. This could just be a shorter term top. Remember, most years we see 5 to 10% pullbacks multiple times in the S&P 500. This might be one of them. So we'll continue to track it. Hope that helps. See you on the next.